Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence and your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about parabolic trade setups, continuing our discussion yesterday on day 3, Wednesday, Friday, parabolic trade opportunities. And just before we do that, I'm going to reinforce to traders to go to the playlists. A question I receive often is, which video should I start on? Well, I've tried to compile as much detailed information, specifically most recently in everything you need is in this playlist folder, which this video will be going into, the most recent one, and the most recent videos regarding timings, levels, templates, behavior of price. But also we have a folder, 3-day setups, the trading process, mastering the trading process, the day-to-day process of organizing yourself and being able to track a basket of instruments to help identify 1 or 2 best trade candidates on the day for a parabolic trade opportunity in the session that you're trading. Big explosive trade setups, again, emphasis on the parabolics, and then psychology. And then, I repeat this over about psychology, is that once you start to really break things down into a day-to-day process that's cookie cutter in terms of having specific setups that you're tracking, not trying to trade one market or a couple of markets and catch the movements and scalp the top, buy the low, all that sort of stuff, but looking for 90-10 parabolic opportunities, whether it's on a currency one day, an index the next, oil on another day, maybe gold on another day, and getting yourself into that day-to-day process. I have a work window that I stick to. I trade the New York session. Once or twice a week, I will trade the Asian session, front side, back side, parabolic opportunity if it's there. Most of those trades will last an hour. Occasionally we get a high week, low week opportunity on a Friday, free cash Friday, or a Thursday parabolic that's an hour, 2 hour, 3 hour trade. And sometimes it's an all-in opportunity. But understanding yourself so that you don't go into tilt, so that you don't engage in impulsive, irrational, erratic behavior. It's plug and play trade setups, not trying to trade the markets that are moving. I'm looking for which ones are set up where I have an edge, where my edge presents, and then being able to execute those trades, manage my risk, lock in the money, whether it's a session trade or an asymmetrical range expansion risk-reward opportunity for a scalable 5-star setup to lock in the money and get off the screen. Not giving it back, not continuing to trade, not over-leveraging, not over-trading, not taking get-even trades, revenge trades, anger trades, get back to the high watermark trades. So everything you need is in the playlists. And specifically, again, repeating, everything you need is in this playlist. That's the most recent technical videos where I've tried to break everything down in as exact detail as possible. Let's get started. Talk about parabolic trade setups today. So it's day 2. It's Tuesday. Day 2, yesterday I went over Wednesday, Friday, day 3 trades. And obviously we've talked about this, the different types of setups that can occur. We can have 3-day setups, 3 days of breakout traders, but I'm really going to just simplify everything down to Wednesday, Friday is day 3. But of course we can have parabolic opportunities on Tuesdays and Thursdays, which are day 2s, and the day 1, which is opening range. Wednesday is the midpoint range of the week. And Friday is the closing range of the week. There are 2 types of trades, 2 types of trade setups, pump and dumps and dump and pumps. No matter how you slice it, whether it's a trend trade, a reversal trade, or just in a trading range, there are only 2 types, because the market will either pump and dump in a trend trade or reversal trade, or it will dump and pump. Pump and dump and pump for parabolic opportunities if they're indeed set up, if the instrument that you're actually trying to trade is actually set up. So we're going to look at the major pairs, a couple of currencies today. We'll look at the indexes, situations that occur, and some traders specifically only want to trade the indexes. Some traders only want to trade gold, oil, etc. So if you are going to trade those, Understand the type of opportunity on the day, if indeed there is one on the instrument that you're trading. And so we can have essentially three types of situations that markets will be in. We can be in a trending market. So day one is our opening range. If the market is going to go on a range expansion on day two, we can possibly have a breakout, pullback, trend continuation. And whether that's just it pushing higher or lower depending on the direction of that break, or if it is an actual explosive move for a range expansion of that opening range itself, which we've talked about with measured movements. Could be a low-hanging fruit depending on the session that you're trading. So, for example, Asia may break higher, pull back, and London may go parabolic for a range expansion. The U.S. may pull back and break down for a reversal outside of the high of the week, low of the week, whatever that break occurred. We have markets that will try to break out, whether it's Asia, London, or New York, and they will fail in reverse, and they will trade potentially off the high or low of the day or closing price inside as well, and begin to work back in the other direction. We can see a reversal that occurs on a day two at the high or low of the week and continues from one session into the next. We'll look at an example of that. And again, everything is levels, timings, behavior of price. And then we can have some markets that are just purely in a trading range, and they either offer us a low of week, high of week type of opportunity, or they're just in a choppy market and there is no opportunity, no signal, no best trade candidate, no 3-session setup, none of the above. Now, just to kind of go over some basic concepts so that I can, we've talked about the playbook. My objective is to be focusing on 90-10 setups. Those are the parabolic opportunities. There'll be pump and dump or dump and pump, whether that's occurring over the week itself on a larger time frame template, or even within a session for 25, 50, maybe 100 pips, depending on the instrument. We're going to talk about the opening range and initial balance. That's essentially day one, day two. And obviously, things that can affect these templates are major economic news on the calendar. We have Fed, we have non-farm payrolls, we have retail sales, we have PPI, CPI, different types of news events. Whether or not the actual data is going to impact is not my concern. It's not being in the market and putting myself at risk prior to a major news release. 3-day setups. So yesterday we talked about Friday, Wednesday, free cash Wednesday, free cash Friday as day threes to simplify everything. And then Tuesday, Thursday, obviously, are day twos. Day three longs or shorts in the markets. We can still use this criteria because this fits Monday to Friday. These are inside of the Monday to Friday templates. Parabolic trend trades, the day zero setup. We've been over that. That's the large rectangle made by peak formation, high and low, and a consolidation. Whether that's over 3 sessions, we can get a 3-session setup, but we can get a larger parabolic 3-day setup, which targets a range expansion of that larger rectangle, geometrical rectangle. Again, Schabacker, Edwards and McGee, Peter Brandt. That material is 100 years old, classical charting. Parabolic short squeeze reversals. We saw one on gold yesterday for a session trade, which actually thus far has been the low of the week on day one, day two. And low-hanging fruit, the trend continuation, which is what we saw at the beginning of the U.S. session today, which gave traders a range expansion as a potential target. So just reviewing the larger templates over a Monday to Friday cycle, we can see choppy markets sometimes on the front side, which will give traders session trades, etc. They don't completely go on range expansions. Sometimes the template is choppy on the front side, the escalator, and then we can see backside, first red day, and the dump template. And sometimes those will be parabolic moves. Again, the news calendar can affect those. We can see day one, day two, an inside day, and then triggering the low of the week and the inside day for a parabolic reversal on the third session, the U.S. session on a day three. There are different types of templates. Today we're going to talk about day twos and hunting out an instrument that offers us a parabolic opportunity on a day two. The pump and dump, dump and pump on the day itself, a well-engineered template on a day two will give us potentially an opportunity for either a trend trade or a reversal trade. So understanding the three things that markets do. They break out, they pull back, and they trend. So if we have a day one opening range and day two breaks out and pulls back, Asia London, we may have a trend continuation for a range expansion opportunity on a day two, which is a day two opening range breakout trend market, a day two trend trade, as we saw in gold today. We can see a breakout reversal trade, which occurred on our indexes. We're going to talk about how I would have approached that had I chose that. I went with the gold trade, but it's all understanding where the levels are, which instrument offers you the best risk reward, what time is it, and how does price behave. So we'll look at the difference between each one of the indexes. We're going to look at a couple of currency pairs that gave low-hanging fruit trades and reversal trades. And then we'll look at a couple of instruments that were still stuck primarily in a trading range and were markets to avoid. There are trading range opportunities that will be high of week, low of week, that type of situation, or a range-bound market for a week, which essentially can be, again, a high of day, low of day trade, but it's trading between the high and low of the day and the week. But it offers traders potentially maybe 2-to-1, 3-to-1 in some cases, as opposed to a pump, which we'll talk about. We can get our opening range. That sets our initial high-low. We can get a day two trend trade or day two breakouts in the market. And we can get a market that gives us a day three. So this is the front side. So this is where traders sometimes they get into a situation and they're looking for the trade on day three, because we're on a day three. We have 3 days of breakout traders maybe in the market, or a 1, 2, 3, 1 push, 2 push. And they're looking for that trade on the day three itself. And they're trying to short it up top here. And we see that market roll over the next day, potentially stay as an inside day, can coil and break down on a Friday. So this could be day one, day two, day three on the back side. So sometimes the markets are choppier front side, making this day one, day two, opening range initial balance. In a high percentage of situations, one of those extremes will tend to hold, the opening range initial balance, which is what we talked about, which when we project across, Tuesday's high of the week has held. We've had an attempt to break out that has failed. That's a 5-day template. But we can have potentially an Asia or London trade still on the front side. We can get a London or a US trade. It could be a London trade on day three on the back side and low-hanging fruit continuation in the US session. Sometimes we'll have a market that dumps down. The market continues to work into the low, doesn't really offer a best trade setup on the day itself or in the session itself. And we may see it continue to work into that low and still not offer traders a best trade candidate. We can see this market attempt to stay as an inside day, maybe towards the end of the week, before potentially breaking down in either direction. So this is, again, how does price behave on the day itself? What type of template does it set up on the day three? We can have a market that may set up like this, but on day three, break out and dump down for the pump trade in the US session or the London session, whatever that may be. And sometimes we may just get a pump, and a pump, dump, first red day, and we can coil again and reverse, even though it's a first red day, as we saw last week on several pairs, and on Monday on the DJ30. We can see a market dump, and reverse on day three in the US session, maybe on major red news. We might even see it work into a high on day two and roll around and reverse on day three. So we can get a parabolic on day three. Maybe it's going to be in Asia. It could be an Asian cross pair. It might be in London. It may be a 3-session setup that just keeps breaking down and blows off on the direction of that reversal. And it's a day one, day two, day three on the backside, a day one, day two, day three on the front side. So there, an example where if I'm trading the US session, I may have a parabolic trade on this instrument on Wednesday and one trade on this instrument on Friday, but they're both parabolic opportunities. And as I mentioned repeatedly and re-emphasize this on yesterday's video, is that you only need one or two parabolic opportunities a week to really compound your account. So trading the smaller choppy stuff or trying to scalp in a range, as opposed to when I get this larger template set up for a parabolic move, this is an opportunity where I can potentially scale in and be taking profits out as it continues possibly on a range expansion, whether that's 100% range expansion, 200%, whatever that is. But I'm looking for a parabolic opportunity. Which brings us to today's video, day 2. We can have a market that is potentially maybe coming out of a peak formation low, or it's breaking higher, might break higher, make a higher high on day 2, and dump down and continue for a range expansion in the U.S. session, as we saw on gold, a day 2 parabolic opportunity. We saw the indexes break out on range expansions yesterday and start to break down on the inside in today's session and continually breaking lower into the New York Open for a collapse into the breakout levels from yesterday's New York session. An example of where traders had an opportunity for a session scalp. Some may have held on to that hoping it was going to break through or go on a range expansion on any one of the 3 indexes. Whereas other traders were purely identifying this as a nail and bail opportunity for 50 pips, whatever that range was. We'll look at that in a moment. And other instruments, we'll look at a pound Canadian, I believe it was. We'll look at those as well. They broke down, continued to work into the low, and reversed in the U.S. session for a reversal trade on day 2. I'm not sure. We'll take a look at where that closes, but that may be the low of the week. Again, opening range, initial balance, day 1, day 2. My point in the video today is to emphasize that day 1, day 2, that's our opening range, initial balance. We can still hunt out a parabolic opportunity. In some cases on a day 2, peak formation low, peak formation high, we may have a parabolic opportunity now that is either, as we saw in gold, a range expansion for a profit on the day. Who cares if it reverses and comes back later? We had Fed, whatever, but there was over 100 pips for traders on a parabolic range expansion. We had a parabolic reversal on day 2 on the indexes, which gave traders a no-stress 50 pips at least. I think NASDAQ was probably the cleanest. We'll look at that in a moment. Or even currency pairs. So depending on the session that you were trading, some traders might have had session scalps. We'll look at some different patterns. The Japanese yen gave a reversal in the U.S. session. On a day 2, there are opportunities for parabolic trades, even though it's not Free Cash Wednesday, Free Cash Friday. The idea on Free Cash Wednesday, Free Cash Friday is that we get a day 1, a day 2, and either a trend trade for a range expansion or a reversal, possibly for a range expansion, or even a low of week, high of week opportunity, high of week, low of week opportunity, again, which is an asymmetrical risk reward. Some day 2 trades will be as fruitful and as profitable as a day 3 parabolic. So understanding the opening range and initial balance, whether it's on the front side or the back side, the midpoint range and the closing range, that high-low level gives us an idea of what our potential profit levels are on the trade, which gives us an opportunity, if it is a reversal trade, for asymmetrical risk reward. If I'm risking 1R up top for maybe 5R or 4R, then that's a great trade opportunity if that market's set up. So again, my objective is to hunt out the best instrument. If it's a trend trade and I'm going to go on a range expansion, same thing applies. But if it's a 200% range expansion, whether it's low week, high week, whatever that may be, this may offer me 10R if it's a powerful 3-day template setup. This becomes, as we saw on some of the indexes, a day 0 template where we have a larger rectangle, and that's where asymmetrical risk reward comes in. Me scalping for 20 pips and getting out is not what I'm looking for. I'm looking at the larger template where even if the market is already starting to move, as one trader said today, well, the market's moved before the New York Open. Well, as I'll repeat this, Index is open at 9:30. Oil primarily, I'll look for something from 9 o'clock onwards. But all the markets on any given day may offer you a pre-market movement. So oil, gold, currencies can start to move between 7 and 8 a.m. We've talked about that in the playbook. They're different than the indexes. The indexes open at 9:30. So when I say to traders, well, the market's not open yet because it's not 9:30, that's primarily focused on the indexes. But if a market is making a new high or a new low and I'm not in the market and it's moving, understand this. Listen closely. You haven't missed anything. If they're moving higher or moving lower, that means the low of the day or the high of the day is not yet in place. It's not moving without you. It's not set up yet, and that instrument may not be the best candidate to trade on the day. That's what I'm trying to emphasize. When trader says, oh, it moved before the market opened, what did? Your favorite instrument? The only one that you follow, or your whole basket moved? If your whole basket's moving, what does that mean? It means there's either not a best trade candidate on the day, or it means sit on your hands and wait. If it's not 9:30 yet and the markets have moved all over and you think you've missed out, that's what they want you to think. They either want you to chase something or they want you to get into the market before it's actually set up. It may take another hour, 1 hour, 2 hours, 3 hours. So you have to be thinking, especially today, as I mentioned, FOMC on the calendar. It's not a mistake that they move the markets before 9:30. That gets traders trading either down low, at an extreme, outside, up top, down low, and it may not even move. So you get into the market because it's up high or down low, and then it sits there for the next 4 hours or doesn't really go anywhere, and you're caught in there. So on those days, if you see an opportunity and you choose to trade that before 9:30 on the index or whatever else, just make sure you understand the setup that you're trading and that you have a 90-10 candidate, because there are opportunities there. The reason why I focus on 9:30 is because that is when the market opens, and that makes me have a rinse and repeat system that I can reproduce every single day. I don't worry about, should I come to the screen at 6:30 tomorrow morning and try to trade it? Should I be there at 8 o'clock tomorrow? Should I be there at 11:30 tomorrow? No, I come every day and I'm prepared for the New York Open. If I see gold setting up in the first hour or going into the first hour and it's a trade and it's day two, I don't need to wait for 9:30. There's no major red news in that first few hours. Gold is different than the indexes. Okay? But if I have a market that's moving and putting in an extreme and we're heading into the New York Open, I'm going to look for the New York Open potential for either a trend continuation, low-hanging fruit opportunity, or a reversal trade opportunity setup. So we're looking at gold. I've left the chart as it was. Monday, day one, we had the reversal trade yesterday right at 9:30 at the New York Open. I'll just highlight that. So day one. Now this technically did not close as a first green day, but I want to point out to traders that timings, levels, behavior, price, this is a first green session. We're not going to make it too complicated, but first green session, the market went higher and made a higher high. That higher high is when it breaks the daily level. Number one, it broke out of the daily level, but it broke the high of the week, the higher high. Now let's go back to our simple understanding of what a well-engineered chart should look like on the day. Peak formation high that trades back up to in the London session, might have even pipped it out a little bit, but we have a peak formation high. Okay, we've touched the high of the day. This market's now in play. Higher high. Higher high. Traders are looking to sell it. They sell it in the London session up top. Peak formation high. Peak formation low. What do we have now heading into the U.S. window? We have a day zero setup on day two. A day zero setup on day two. What is that again, Stacey? That's peak formation high, peak formation low, consolidation. Consolidation. This consolidation was our gift down low. We have volume trap down low. This market started to go right at the beginning of the session. And when we see this on day two, if our thesis is this is a trend trade, which is why I put my measuring tool on here, again, just high and low, which essentially is number to number, 75 pips. We have a target, a potential profit target of one full range expansion based on timings, levels, behavior of price. Now, one trader said, again, we're up top here. I'll just circle this candle. The New York Open candle is right up top here. So the trader's comment was the market moved before 9:30. Now I want to say something there, as I've mentioned before. If you're going to trade from the inside, it has to already be coiled in a parabolic setup. You can put our universal EMA on there. Doesn't matter. It's as clean as it gets for a parabolic trend continuation trade. And this is just a momentum line, higher highs, connecting that. Bill McLaren, simple. Just that's our channel. But if you're up here and you're focused on gold, so remember my strategy is this: when I get up here, I might keep my eye on gold. But the longer this goes, it gets outside of my window. So I'd be looking at other markets because I'm looking for where's the easy money. Now, today I was inside and on the way out because I saw that this was a range expansion. I put this chart up with that high of the channel as a potential area that this could head to. I was sort of optimistic that we might see that continue. But time of day, we're up here at the New York Open. We get an engulfment and a consolidation 50, the level 50, the major round number of 50 is a level now where traders, if they were looking for that reversal, somewhere best case fill, smaller time frame, this is a 50-minute chart, but that market did reverse eventually, right? So when traders say that it already moved, when a market opens at 9, if the market, New York equity market opens at 9:30, and that's primarily the time you're focused on, as I said, I look at that for indexes. But if you're up here and you're focused on that, remember, if they are going higher, that means the high is not in place yet. So at some point, there will be a reversal trade. We had no major red news until Fed later, so there might have been a session scalp, whereas I felt the easy money, as we talked about yesterday, what type of opportunity do we have? And today was a range expansion opportunity. We have a high-low rectangle. That's asymmetrical risk-reward. This was a gift on day 2 for a parabolic range expansion. An opening. We already had an opening range breakout. Broke out of Monday's high. They pumped it up, dumped it down. Peak formation high, peak formation low, consolidation, trend continuation. We haven't seen much of a reaction. Today was Fed meeting minutes, so not the same as the double release. But a great day 2 parabolic trend continuation trade. Now I'll run through the indexes. When we see a reversal, we've heard about the half Batman pattern. This is textbook. This is as clean as it gets. We've had several day 2 reversals, whether it's on a Thursday or a Tuesday. Levels. So the levels are all still relevant. We're inside, but we're on a market that broke out on Monday. So it broke out of the high of the week. It's broken down, lower lows, lower highs on the inside. This is a 15-minute chart. It is not a dump and pump template. We're making lower lows heading into the New York Open. So we have a situation where we've broken back inside. My next area of potential resistance is the previous day's U.S. session levels. We had a breakout from Thursday's high of day as a potential area that failed initially. This boundary of closing price and high of day may be a level of support. It hasn't gone there yet. Now I'm just showing you what my analysis is because this is what I look like when I look at the 3 indexes. This is the type of stuff that I look at, and initially all I look for is yesterday's U.S. session peak formations. So I talked about the high and low of the day are made by peak formations formed in the session itself. So there's our high of day peak formation in the U.S. window. We have a peak formation made at the open of yesterday's New York session. That market broke through the high of the week and pulled back and continued. I'll just mark this off and made a higher low peak formation in the U.S. window. So we broke out, we pulled back later in the session. That area now is a potential area, as well as the breakout high of day level from Thursday and the U.S. session lower peak formation high. Now, when I look at this, so it was already back inside, I will look at the NASDAQ because to me that was the cleanest chart. So what I want to know is what's my range, my potential range that this area offers. I would already know this in advance. I would know the numbers, and if I was going to short this, I need to know where this potentially may fail. We're trading back into the breakout of the high of the day. So That's as simple as it gets. And I will typically just take the one which is furthest away from the next level. That to me offers, if it's a clean chart, that offers me the best asymmetrical risk reward on the day if I'm going to trade an index. So coming back to gold, if somebody feels like they've missed the trade, or they don't see anything on a currency, or they don't see anything at all, but they see a possible setup on an index, which one gives me the cleanest chart? Which one gives me the largest range for asymmetrical risk reward if a market was to go level to level? And just on that, I want to point out again the first 15-minute bar of the New York Open. So this is our 9:30 candle. And if traders sold the close of that bar, I'm just going to put these lines across. We'll get rid of everything else. We have still not broken out of those levels. We'll leave the low of the day level on, and we'll leave that one on. So essentially right now we have somebody possibly has shorted this on a longer time frame, maybe a 5-minute. If we look at the 5-minute and they're still holding on to this, these levels may become important heading into tomorrow's U.S. window. We have trap volume. Maybe this market will break down. I have no idea, but whoever's short this right now, they're neither in profit nor loss. They're basically where they got in. That market has gone into consolidation. Day 2. No idea. This could end up being a larger dump and pump. Day 1, day 2, day 3. Or we could have this market break down, become a first red day. It's inside still. It's an inside day. That may also end up being, depending on how the chart sets up tomorrow, could be a reversal opportunity heading into Thanksgiving weekend. Thanksgiving Thursday, Black Friday. Tomorrow's Wednesday. They may trap traders, or they may have a parabolic opportunity on day 3. So we have a reversal on the NASDAQ heading into our U.S. window, our U.S. New York equity market open window. And again, this is just an example of a market that is collapsing and breaking down. It's one question I had from a trader, an excellent question. What's the difference between a creeping trend and a parabolic trade? A short squeeze. And they're not the same thing. A short squeeze is an actual setup. A creeping trend will go into a setup itself. So a creeping trend will resolve itself in one of two ways. It will either collapse in the direction of the creep. So again, if you can find Bill McLaren's material, study creeping trends, or it will be creeping into a squeeze, whether that's creeping into a high for a long squeeze or creeping into a low for a short squeeze. They do not set up the same. A creeping trend that is going to blow off will be creeping and making lower lows and lower highs. A short squeeze reversal trade will creep into a peak formation low and jam traders in for an explosion in the opposite direction, and vice versa for a long squeeze. This market collapsed, and one of the things that I encourage traders to do, if you are trying to get in right away because you feel like you're going to miss a move at the open, is I'm constantly, telling myself you're going to be probably a minimum of 15 minutes. Now, there are moves that will explode on the open, but they coil prior to the open, whether that's on a 5-minute or 1 minute, and they will coil for 5, 10, 15 minutes. But when we have a market that's breaking down and coils at the open, trades for 15 minutes, and gives a pin hammer engulfment in line with the existing collapse, this is the capitulation trade, the blow-off move at the open of the U.S. session. And you'll notice just 1 candle, 2 candles, doji, 3 candle collapse. This large candle is the capitulation. So I know traders are going to say, well, what's that in layman's terms? Capitulation means that's the collapse. Again, Bill McLaren. That's what old traders call it. Original old-time traders. They call it a capitulation. New-time retail traders, I don't know what they call it. They call it a big bear candle. So it's a capitulation. That's the exhaustion of the sellers. That blows off, and you'll notice that coincides with the peak formation low made in the U.S. session and the high of day level. So level to level, high of day to high of day breakout. Same thing, which you'll notice becomes a low of day in the U.S. session. High of day, low of day, an example of what we talked about yesterday. What type of template is it? Is it a range trade? It is. We're 3 sessions into it. It's a 3-session setup for a blow-off. Not quite 75 pips. Pretty close. Yeah, 75 pips. I believe traders got 75 on this opportunity. That closed at 16,004, went down as low as 916. So 75 pip opportunity. So coming back to comparing that to the DJ, it was already inside of a range where this was trading back to the range and gave traders minimum of that opportunity just following this through. There was maybe they thought the hypothesis was that this could continue for a range expansion to the downside. It didn't do that on Fed or anything else, but again, when it reaches a level, how does price behave? How long has it been there? What is the timing? We're at the end of the hour of the second hour. So we've got 1 hour, 2 hours down, new hour about to start. I'd be locking in the money and walking away. S&P 500, very similar. Again, peak formation, a low made in the U.S. session, a breakout, another peak formation low, and you'll notice that little space below the candles. That's almost a dead giveaway. They're going to get blown through right at the open. So just measuring that range again to assess potential profit target, knowing what the level is, the breakout high of day level. And that was roughly 100 pips from the beginning of the pin hammer at the New York Open. Again, 15-minute chart to the high of day level was roughly 100 pips. So when you get in that situation, the biggest thing I want to emphasize is that if you are trading these as a blow-off, low-hanging fruit type of trade, the most important thing is for traders to understand not to counter trend this until it gets to a level if there is a setup. So I wouldn't be counter trending that myself, but I want to make sure if I'm going to be trading that I'm trading it in the direction of the blow off to the level. So the trade is already in progress. That's the thing to understand. It's already broken down. It's already a short trade setup. Lower lows, lower highs. Asia, London, continuing. Little peak formation highs and lower lows breaking down for the blow off at the New York Open. Asia, London, lower highs, lower lows into the New York Open for the capitulation into the breakout traders from Monday, day one. So an example of a day two reversal session trade on day two, Tuesday, nail and bail. So the Japanese yen offered traders a fantastic trend continuation trade in Asia. So day one, Monday's our opening range. Day one, day two is Tuesday. We have a market that pumped up in the U.S. window, peak formation high, made in the session, heading into our new day. Asia, Japanese yen is a pair that potentially may move in Asia. So we'll look at Monday's session. We I think talked about this briefly yesterday. A brilliant pump and dump opportunity in the Asian session on Monday, day one, in continuation from a first red day trade on Friday. Day one, day two, day three, continuing in the direction of a trend, starting a new week. Now we have our opening range. Shorts are in the market. Day two continues in the direction of the trend. Right? Day two, Tuesday's day two continues in the direction of the trend for an easy, no stress, 50 pip parabolic blow off move on day two. Now we have a low of day put in place by the Asian session traders. Peak formations are made low of day, high of day in the session that we're trading. They go lower in the London session. They trade into the low and go through it in the London session. Peak formation low made in the London session. The market then proceeds to consolidate inside of that peak formation low, trades back into it at the beginning of the U.S. window before engulfing. We'll zoom in on this. Engulfment. And a peak formation low into the engulfment. 9:30 New York Open takes traders into the extreme before engulfing at the beginning of the third hour. Now, just some simple stuff here. Let's look at the numbers. Where's trap volume? It's all below the quarter level. Quarter level is 75. So if my thesis is that I want to take this as a reversal trade, I want to be getting in all the way up to 75 as best fill as possible. What that means is that once I have a confirmation of this thesis, I will be looking to add into this trade under the quarter level, because once this breaks out, thesis is that it should take out these lower highs and continue back up towards the high of day level is the first level, which was the breakout level of the opening range, and continue potentially to the magnet level of closing price. Closing price, high of day, low of day levels. The market broke out and went lower. What do? We redraw our levels. They made a lower low. They traded into the low on day 2. Are they working the high or are they working the low? 1 session, 2 session, a 3-session setup. Is this potentially going to give us a parabolic trade opportunity? Absolutely. Short squeeze, low of the week, day 2 parabolic reversal trade on the Japanese yen. We're looking at the Euro Canadian. So this is an example of where we have a day 1 runner, and traders have heard me say don't counter trend a day 1 runner. It broke out in London. It continued to be in a trending setup on the day itself, day 1. We also had an inside day on Friday, and that broke on Monday when it broke out of Friday's high and Thursday's high. That was the high of the week. So we have a day 1 breakout and a day 1 runner. And this is an example of where I've told traders I will sometimes go to Forex Screener on TradingView, and I'm just looking typically at the percentage of change going into a session from the close of the week. You can do from the close of the day, but oftentimes it may not be too far off from the previous day's close because you've gone up high and it may be preparing for a dump or a pump. So I look at on day 2, right? Day 1, day 2, day 3, how far am I away from the previous week's closing price, but also in terms of strength and weakness, which pairs are strong. So our US, New Zealand, Aussie, pound, etc. I may look at the 2 strong and weak pairs, or in the case of the US crosses, the same thing. So in terms of the negative pairs, obviously, the further the drop, the stronger the Japanese yen is. The Swiss franc is the middle, and the Canadian is the weakest of the 3 in terms of change. But you can just have a quick look, which brings us back just to the Euro Canadian. So this is a fantastic example of a reversal on day 2 that is pump and dump. So we can get the collapsing reversal that just keeps making lower peak formation highs, which is a smaller time frame pump and dump. And then we have the larger templates. We have a market that put in a peak formation low in the London window yesterday, and that started our pump. That market continued to pump higher and gave a reversal trade in the London session. There's our box. We have 3 levels of rise. They gave the micro M structure. So 15-minute chart. We have our engulfment in the London window. That forms our first break in structure on the inside for a lower low and a lower high. You'll notice also lower peak formation high in the London window. That becomes our high of the day. As you've heard me say, peak formation low, peak formation high. Are they working the high or are they working the low? There's our box. There's our day 0 setup. They pump it back up into our lower peak formation high before engulfing. There was an orange-red news housing stat release that takes out the low, makes a lower low, and heading into our New York open window, we get our little 1, 2, 3 pump and engulfment right at the New York open underneath closing price. Thesis, therefore, can be a low of the day trade or a possible range expansion of closing price and high of day levels, which the market did hit through low of day, continued to break lower before putting in what potentially may now be the low of the day, a peak formation low in the U.S. session. But that gave traders an easy 50-plus pips, engulfment, pin, hammer at the New York open. So a day 2 reversal parabolic trade, 90-10, peak formation high, peak formation low. They worked back up into the high, went into consolidation for the collapse back down on a day 2. So in closing, if you are following a basket of instruments, study these charts. These are best trade candidates. We saw trades in Asia on the Japanese yen. We saw them put in a peak formation low in London and a parabolic short squeeze reversal, a 3-session setup at the low of the week on day 2. We see a day 2 parabolic reversal on the Euro Canadian. We saw parabolic reversals on the indexes and a 3rd session parabolic blow off for 50, 75 pips, depending on which instrument traders took. We saw a parabolic range expansion on day 2 on gold, a dump and pump setup, higher highs, a breakout market that made higher highs and dumped into the breakout, coiled sideways, peak formation high, peak formation low, coiled sideways for a range expansion trend trade on day 2. Study the opening range and initial balance. Parabolic trades can help grow your account fast. These are 15-minute charts. The longer time frame gives us a larger template thesis. Day 1, day 2, tomorrow's free cash Wednesday. We have Thanksgiving Thursday. We have Black Friday after that. So we may have, I'm sure there'll be best trade setups. And often on those days, I repeat, often on those days where we have American markets closed, cross-rate pairs may offer best trade candidates, ones that are cross, such as Euro Canadian, Euro Aussie, Aussie Yen, as opposed to maybe a US dollar cross, which may be a little bit quieter on those 2 days. Hard to say, you never know. But when we have US markets closed, I will not be trading those sessions. Keep it simple, traders. 1% better every single day. Look for the best instrument on the day itself. Free cash, parabolic opportunities, master your craft, keep getting better, and may the markets go with you.